This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Hi, everyone. Welcome to the weekend edition of Bloomberg Businessweek. Well, it was hard to keep track of the news flow. I never had enough Bloomberg screens up, Tim. I'm just got to say. A lot of stories this week with Sam Bankman-Fried and Donald Trump in court. Of course, D.C. with Kevin McCarthy getting ousted from his role as House Speaker. In a moment, we're going to hear from the founder and executive chairman of logistics giant XPO, trucking giant as well, on how politics at home and abroad affect his business and what higher rates really mean for the macro outlook.
Also ahead, Churchill's Ken Kensel remains ultra bullish on private credit despite rising defaults. We're also going to speak with the head of Northwell Health on the promise and peril of AI when it comes to the healthcare sector. And the Bloomberg equality issue. It profiles entertainment mogul Tyler Perry, who's become a one-man tour de force despite being largely ignored by Hollywood studios.
I love this story. So many great nuggets in it. All of that to come. We begin with the wild week that was for global bonds.
I thought you were going to talk wild week for politics.
Oh, yeah. Check. All right. Yes. Also for American politics is House Speaker Kevin McCarthy was voted out of his role. I mean, it's just kind of hard to still get your head around all of it, and it's continuing to evolve. All of this against the backdrop of a big batch of U.S. jobs market data. A lot for us to talk about. And to help us make sense of it all, we turn to Bloomberg News rates reporter Michael McKenzie. And as we mentioned, Brad Jacobs, founder and executive chair at XPO, also the co-founder of United Rentals, former chair of United Waste. He has lots of experience when it comes to the real economy. Bloomberg economics editor Molly Smith and I wanted to know how closely he watches yields. And this conversation happened about midweek.
That determines what you want to do with your capital spending. Do you want to spend more? Do you want to spend less? Do you want to invest? So we pay a lot of attention to that.
Well, Michael, come on in on it and then lay it out for us, because it's been kind of a wild ride once again when it comes to global bonds here.
Yes, it has, Carol. And I think the story remains people are still trying to work out where is the top in yields, particularly for 10-year yields, which matter a great deal for the U.S. economy. That's the yield that determines mortgages and also helps determine a lot of the corporate borrowing costs. It made a run above 480. A lot of people talking maybe 5%, but it wasn't that long ago. In fact, just a couple of weeks ago when we were talking about 450 was going to be the ceiling. So really, when you talk to investors and bond managers, as I've been doing for the last few days, there's still a sense of shell shock out there.
Yeah, tell us, Brad, if you want to come in here on the logistics perspective. This has got to be such a tough environment to operate in right now, with the idea that interest rates are high and going to stay that way for a while. You've got goods demand and the economy seems to be waning. I mean, how are you managing this right now, and how would you describe how the business is doing?
Well, interest rates are higher than what they were, because they were low for a while, but I'm an old dog. I remember when interest rates were much higher than where they are now.
But is that an important point? Because we keep saying perspective. I remember working with folks who said, I remember having a 15, 16, 17% mortgage rate.
I remember when high yield bonds were in the mid-teens, and that was normal, and that was for a number of years. And I remember back at United Rentals when Leon Black was on our board, and he... Of
Apollo fame, of course.
One of the first inventors of the junk bond, now then high yield, called high yield. And I remember when it went down to about 10%, he said, we got to get as much yield as high yield issue as much as possible, because it's never going to go below here. Of course it did, and stayed there for a long time. So historically, we're not at very high levels.
Michael, come on back in, because I think Brad brings in a good point, right? When we talk about the amount of money that continues to maybe come into the economy, fuel it, and continue to put pressure on the inflationary side of things, what are the markets telling us about monetary policy and inflation at this point?
Well, he raises a very good point, and I think this is what the market has missed, particularly the bond market. At the beginning of this year, they really thought there was going to be a recession by now. And that hasn't come to fruition. And in fact, the stimulus coming through the Biden infrastructure and other plans is still kicking in. So the key here is that's probably going to keep employment pretty tight, and that's the one metric that everyone's now watching. And until you see employment severely weaken and then suggest the economy is on a recessionary path, bond yields are going to stay high, and they may go higher. And I think inflation is still fairly elevated. It's more than double the Fed's target, so that still has going to take time to come down. But a sticky inflation environment a resilient economy led by the job sector, and this fiscal stimulus still coming through from Washington, rates are higher for longer.
I'm curious, Brad, do you have a question for our rates guy?
I do. How confident are you in that? What's your level of conviction on that? Because most people have gotten this completely wrong the last couple of years. I remember I was at a trade organization for mostly Fortune 200 CEOs about a year and a half ago, and we voted on the little Slido app of whether we were going to have a severe recession or a moderate recession or no recession, and over 90%.
Sounds like a conference poll, but go ahead.
Yes, and over 90%, well over 90%, said it was either going to be a severe recession or a moderate recession last year. So obviously that never happened. So it's how confident are you in your prediction?
Well, it's interesting you made that point, Brian. So I was talking to an investor this morning who said he thinks now that rates are at levels where you will get a recession next year. However, he's still, that's his gut feel, but he says, I still got to check that. I'm not confident enough that, we will get a real slowdown. And so therefore, it really, I think the market's it's been saying recession, and it's been caught out every time. I think it's still going to take time for the stimulus to come through and wear off. And I think the other real factor, I think one of the big changes here is the bond market's always been used to this idea that, if rates go up, something breaks. Nothing's broken. And I think a reason why we haven't really seen anything break outside, of course, regional banks who've now been ring-fenced by the Fed. And that's a very important point, because as long as they stay ring-fenced, that's not going to bleed into the economy as much. But I think the key fact here is you've got a lot of people sitting on 30-year fixed mortgages below 3% who do not want to sell their homes and take out a new mortgage. And you've got a lot of companies that benefited from borrowing at very low rates back in 21 and 2020. And again, you're not going to get that corporate bond hit that we would have got from higher rates.
Delighted to still have with us Brad Jacobs, founder and executive chair at XPO. Your customers include everybody from Amazon, Apple, ADM, Lowe's, Walmart, Home Depot, so many more companies. And you have a global perspective. Where is, though, the strongest parts of the global economy in your view? And how does geopolitics potentially continue to kind of impact that and change that?
Geopolitics is very important.
China, I think about.
The two biggest things are obviously Vladimir Putin and Xi Jinping.
Yeah.
Who could literally single-handedly, either of them throw a pretty big monkey wrench into the whole world economy.
Yeah.
Those are not insignificant possibilities. Those are not 1% possibilities. So we have to pay attention to that. But we can't be obsessed by that. We can't just be held down and just enamored by just those features. So we just keep trucking along.
But okay, cute, very
Trucking
nice.
along.
But
You like
Brett,
that, huh?
but Brett, in terms of the pushback against the globalization of the economy, and we talk about that being pushed back. Do you see that, guys?
Oh, for sure.
Firsthand.
Yeah. So you mentioned before.
And increasingly so.
No question about that. So you mentioned before some of the customers you have. So I'm privileged to have windows into GXO, RXO, XPO, where we have a whole cross-section of customers around the whole world. And so you get to see a lot of information what's going on. And you also get to interact with a lot of customers, a lot of boards of customers, a lot of C-suite. There's not a single board in America that's not who has and has had business in China who's not thinking, I need to diversify away from China. It's just the risk is too high. So everyone universally is doing that.
What about the risks in our own political system? Does that crop up? Does that bother you? Does that worry you about what happened this week with the Speaker of the House?
Well, that's the two-party system, and that's been going on for a couple hundred years.
Do you consider it functional?
It's worked for 200 years. I mean, as a global traveler, I certainly would not want to be in any of the countries that have one-party systems. That's the worst. I mean, there's a very repressive, horrible cultures, and this is a country where, despite everyone fighting with each other and calling each other's names and certain levels of dysfunction, we, unlike China, don't have 1 million people in prison camps because of their religion. We, unlike in Russia, we don't have journalists like you. If you criticize the president, you go to jail for 8 years. So, I mean, it's still a great country, a fantastic country.
When we're looking at some of the trends in the U.S. economy right now, I mean, we've been talking about for so long the shift of preferences from goods to services. And I would think from your perspective, that's probably the last thing you would want to hear. You want people to be buying stuff, right?
We are good. All of the three companies I mentioned move goods one way or another. So more goods is better than more services. But for the economy as a whole, that's a normal cycle. Sometimes it's more goods, sometimes it's more services. We're not in the best part of the cycle to be in transportation. But there are specific things that each one of those three companies are doing that are independent of the macro to improve the businesses.
That was Brad Jacobs, founder and executive chairman at XBO, along with Bloomberg's Michael McKenzie. Brad, by the way, has a new book coming out in January, How to Make a Few $1 billion. More of our conversation on that and on his portfolio of companies. It's all available on the Business Week podcast feed. Molly Smith will be back with us next hour. And I got to say, Tim, Brad's going to come back to talk about that book. He and I have been exchanging conversations on LinkedIn.
All right. Well, hopefully I'm there that day.
You better be there because he's a lot of fun.
Mark it down. You're listening to Bloomberg Business Week. Coming up, why Churchill Asset Management CEO Ken Kensel sees upside for his business despite upheaval in Washington, and the higher for longer rate environment, well, we appear to be destined for.
Out of those dynamics has come one of the most attractive opportunities that I've certainly seen in my career in direct lending, in private credit.
The head of Nuveen's $47 billion private capital affiliate joins us next. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
Banks, as you know, increasingly muscling in on the $1.5 trillion private credit market in a move that further blurs the lines between private lending funds and their traditional banking rivals. Bloomberg News reporting this month that Barclays, Societe Generale, and Deutsche Bank have all made concerted efforts to grab a slice of the increasingly lucrative, corner of leveraged finance.
Back with us for a temperature check on the private credit world is Ken Kensel. He's president and CEO of Churchill Asset Management, Nuveen's $47 billion private capital affiliate, which is the asset management arm of trillion-dollar financial services firm TIAA. Ken spoke with Carol and Bloomberg's Simone Foxman from the Greenwich Economic Forum in Connecticut this past Tuesday. This was just ahead of Kevin McCarthy officially losing his post as House Speaker.
Uncertainty is generally not a good thing, and certainly we've had a lot of that over the last year. The current environment that we've been, living through has, certainly created a very challenging dynamic overall. And of course, the banking turmoil in the spring, and of course, now some of the dynamics playing out in Washington. But I would say that out of those dynamics has come one of the most attractive opportunities that I've certainly seen in my career in direct lending, in private credit. So I guess in that sense, I'm never one to wish for dysfunction and uncertainty, but I will say that in many respects, private credit and direct lending, unlike the GFC, Carol, has been here, if you will, to kind of come to the rescue a bit by providing the financing capital and lending capital and ultimately growth capital to the companies that need that capital and have done and have performed well through the current environment. So in that sense, we're super busy and hoping that if things settle down a bit, we were certainly hoping for that post Labor Day that we'd get even busier.
Well, interesting that you talk about private credit like this because Bank of America actually put out a note. They said that private debt defaults are going to reach 5% by early 2024 because a lot of deals, 1/3 of deals come due in the next 2.5 years. Is that bad for private credit, though?
Well, first of all, I'm not sure I agree with those numbers.
Okay.
The reality is if you look at our portfolio or the portfolio of any number of, what are arguably high quality, top tier, private credit managers, some of which are publicly traded, I think what you would see is generally portfolios have held up extremely well. So, I think that the prediction that default rates would reach 5% is not supported by what we're seeing today. Now that doesn't mean that it won't play out, but I would say that just because there's a maturity wall doesn't necessarily mean that those companies are going to ultimately default. I mean, I think what you may very well see, and you're already seeing it today, is that a lot of those companies are going back to their lenders and saying, look, this is a good business, it has strong cash flow, it's performed well, and we need to extend. And frankly, the reality is that to the extent that the businesses have performed, the odds are very good that they can work something out with their lenders and extend the maturity. So I wouldn't necessarily equate maturities to defaults. Because, as a direct lender, as a private credit lender, we have the ability to sit down with a company and work out the dynamics if in fact those need to be done. Now, it's a totally different story if the company is performing poorly or underperforming or is otherwise not able to make its payments. But I would not attribute just maturity to necessarily creating that problem. And certainly, we are not seeing evidence of that today. So,
right.
It'll be interesting to see how that plays out.
Ken, right. Defaults can tell one story, and you're saying you're not necessarily seeing that. But in terms of rewriting terms and working with your borrowers, are you doing a lot more of that in this environment?
Frankly, not right now. I would tell you that our portfolio today, so we have investments in over 500 U.S. mid-market companies in areas like healthcare, and software and business services. These are all backed or owned by private equity investment firms, which is largely the case for many of our peers. And I think, I've certainly had an opportunity to talk to my peers here at Greenwich Economic Forum. A number of them are here. Mm-hmm. We trade notes, and I can tell you that our portfolios overall are holding up quite well. So, our quote unquote workout person is frankly not that busy, surprisingly, I think, to some. And our new deal people, the folks that are underwriting new transactions, are actually quite busy. In fact, we had we had a record quarter for a third quarter last quarter. And, to the extent that, we do get some clarity regarding the dynamics in and around interest rates and maybe a bit more certainty regarding potential increases in interest rates and inflation. Mm-hmm. I think we could very well find ourselves in a relatively soft landing. And if we do, I think we'll see M&A activity and transaction activity pick up, right? Because, it's really, the markets are really waiting for some stability regarding rates. So there's a lot of liquidity in private credit. Institutional investors are allocating significantly to the space. Yields, obviously, conditions are quite attractive right now, and we're busy.
So I do wonder where you are seeing any cracks, because I do wonder in this higher rate environment, and we are going to be higher for longer. There's going to be some problems. We know that. So where are you seeing cracks?
No, absolutely, and I would say that in many respects, this is the kind of period where the lenders that maybe were a bit more aggressive and looked really good. And getting higher returns, but maybe taking on more risk, I think those dynamics are coming home to roost. But I would say overall, yes. And I would say that where we see cracks, if you will, and there, certainly in our portfolio, there are not many, mm-hmm. but where we see them, they're very episodic, and they're not tied to a broad, pullback in economic conditions. So, for example, a deal that was done a year ago where, they embarked upon an acquisition strategy and those acquisitions did not play out as expected, or where there was a fundamental premise regarding healthcare reimbursement rates and some shifts in the way that they oriented the business that maybe didn't play out as well. So there are certainly situations that have not gone as well as planned, but not a fundamental pullback of the type that we would have seen, for example, in the GFC in any way, shape, or form. So,
can I ask one last question, because we're running out of time? I wish, when I speak with you, I always want like an hour. 30 seconds quick, because we keep talking about, treasury levels, pick your duration back to levels of 2007, 2008. Anything today reminds you of the great financial crisis? Very quickly, like 30 seconds.
Yeah, so I would say the pullback in the syndicated loan markets, in many respects, is a carbon copy in that sense, right? So CLO markets go dormant, liquid loan markets go dormant. The difference this time, direct lending is there, lots of liquidity, lending capital to really go and support private equity. So similar in the liquid markets, but different in the sense that there are direct lenders there now to provide that capital.
That was Ken Kencel, president and CEO of Churchill Asset Management. along with Carol and Simone Foxman earlier this week.
Still ahead on Bloomberg Businessweek, Jamie Dimon says artificial intelligence is going to help extend our lives and rid us of terrible diseases such as cancer. Our next guest heads a massive healthcare institution, and while he's optimistic about the emerging technology, he's not ready to jump all in.
It provides extraordinary opportunity to improve clinical care, improve diagnosis, analyze data, but it also brings with it some potential dangers.
Northwell Health CEO Michael Dowling stops by next. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Technology has done unbelievable things for mankind, but, planes crash, pharmaceuticals get misused. There are negatives. This one, the biggest negative in my view, is AI being used by bad people to do bad things. Think of cyber, Henry Kissinger talks about warfare. But, the fact, and I do think, eventually have legal guardrails around it. It's kind of hard to do because it's new. But it will add a huge value.
All right, so Tim, we've been talking a lot about this conversation that Jamie Dimon had with Bloomberg Originals' Emily Chang, that over the next generation, AI, artificial intelligence, is going to have a profound impact, not just on the way we work, but also in a big way on our health.
Yeah, here's what he said. Your children are going to live to 100 and not have cancer because of technology. And literally, they'll probably be working 3.5 days a week. Live to 100, a world without cancer, 3.5 day work weeks.
Sign me up.
Yeah, sounds pretty great, right?
All right, so let's see what our next guest has to say about the role AI will play in our health. Michael Dowling, back with us, President and CEO at Northwell Health. The largest healthcare provider in New York. The Northwell system treating over 2 million New Yorkers each year at 21 hospitals, 890 outpatient facilities. You guys are hosting your annual Constellations Forum that focuses on AI and healthcare. Constellation Forum, I should say. And you are focusing on AI and healthcare. How are you guys, in putting this together, thinking about artificial intelligence, which is not a new science?
As you just mentioned, AI is not new. The capability of it, the accelerated capability of it, has been enhanced dramatically over the last couple of years, and that will continue. And it's going to be an integral part of everything that we do going forward. So we have to decide. The big decision point for me is deciding what is it good for, and what is it not so good for. And I think we will be going through that analysis for quite a time, because it provides extraordinary opportunity to improve clinical care, improve diagnosis, analyze data. But it also brings with it some potential dangers. You don't want the machine brain to outpace the human brain, so that the human brain can't figure out what the machine brain is doing to you. Okay. And that is something we have to be very, very careful of.
Let's talk about the pluses before we get into the potential dark side here, which sounds like something out of a sci-fi movie. What do you make of what Jamie Dimon said earlier today? Your children are going to live to 100 and not have cancer because of AI technology. Is that true?
Well, I want to live to be 100 first.
That's what we were talking about earlier.
Me too.
Yeah.
Hear, hear.
Yeah, but is that where we are? Is that an accurate thing to say, do you think?
We're getting awfully close.
I think we just got to be careful not to over-exaggerate. I think it can have wonderful potential to allow us to identify the diseases earlier on, especially with the genome sequencing. When you combine the results of the mapping of the human genome with AI, we will be able to predetermine way in advance what you potentially could end up with having problems with.
Okay, so then what would you do about that?
Potentially able to intervene.
What would you do about that if you noticed somebody was set to get cancer?
Well, then I think that you've got to determine, the clinical leadership has to determine how you intervene, how you change behavior so people act differently, what kind of clinical treatments that you have to engage in to allow people to live longer. Remember, in the last 50 years or 60 years, we've added about 30 years to life. Wow. The average life expectancy back in the 1930s was around 47 to 50. Today, we're in the 70s and 80s. So we've had major progress.
I do want to push back on this a little bit, because in recent years, we've also seen it come down as a result of COVID and drug overdoses.
Yeah, but that's a temporary thing. I mean, that happens. You look at the long-term trend. not the short-term, burps in a statistic. It's the long-term trend. And sure, when you have a thing like COVID, there is increase in mortality, and it does come down a little bit. But I don't think that's something that will set a prediction for the future.
What do you believe will be the most significant changes in healthcare that helps patients live longer and live a better, longer life?
The biggest change, in my view, to make those results a reality, it goes beyond the delivery of medical care. It has to do with lifestyle and behavior, so all of the social determinants of health. It has to deal with some of the societal issues. I mean, we do a great job of taking care of you after you get sick, but we have to do a much better job of taking care of you before you get sick so you can prolong life. But that involves finding ways to get people to improve their own health,
but Michael,
improve their own lifestyle. And this is where AI can also be very, very helpful.
Well,
because to be able to do the analytics,
right,
to be able to tell you what people should be doing to improve their own situations and not dependent upon others all the time.
Well, go back to that idea of genetic mapping, and we're born, we get a map, and we can already see what might be the potential problems. Maybe it's heart problems. So then maybe we know from the get-go that we have an awareness. I think about kids who are born, who have, diabetes from a young age, or different issues, if you will. From a young age, that's their life, and they grow into or grow with that problem, and just from the get-go look at life differently in terms of what they eat and what they need to do. And I do wonder if we have that map from the get-go, whether it's removing organs, treating things differently, I just wonder, can we do it better at a much earlier stage?
Absolutely. I think that you'll be doing genome sequencing of all kids within a couple of years in most children's hospitals. We are investigating that possibility right now here at Northwell as part of our children's hospital. So I think that's where it will start, mostly with children. Mm-hmm. And then I think it will expand to be doing genome sequencing with adults. But let's be cautious here, because while it offers wonderful, wonderful potential, we don't fully know all of the implications yet, and we don't fully understand all of the ethical issues involved. So you'll find out something about somebody or some family member. To what extent do you disclose it? To what extent do you share it? How should it be shared, and when should it be shared? All of these issues have to be worked out very, very carefully over the next couple of years. So the enormous potential is here with the combination of genome sequencing and AI. But I think we're going through a process over the next couple of years to figure out how to make use of it as appropriately as we possibly can, and not overreact,
right? Not
underreact either, but not overreact. A little bit of caution is important here. Especially given the situations you've seen with ChatGPT recently, where it produces lots of controversial information that's not correct. You cannot be doing that in the healthcare sphere. It's just too dangerous.
But there's something kind of strange happening here where we're talking about AI, Carol, and what it can do in the future. Because, there's this article in the current edition of Bloomberg Businessweek about amoxicillin shortage here in the U.S. I mean, we're talking about a drug that was discovered more than 50 years ago. And I lived this nightmare on Friday when my son was diagnosed with an ear infection, and the doctor had to spend a half hour of her time calling different pharmacies around Brooklyn, trying to find a 10-day supply of antibiotics, amoxicillin, that ended up costing me $3.16 when she finally found it. Michael, she wasted so much time doing this. How are we talking about a world where AI helps us live to 100, but we can't get amoxicillin?
Well, but that's why this is why you've got to be a little bit cautious, as I said. This is why you can't automatically assume that there's a new technology coming into play that is going to just solve everything immediately. There's a lot of other issues involved. I mean, one of the biggest changes in healthcare is moving more and more healthcare out into the community, expanding ambulatory care, moving stuff out of the hospital, be less hospital-centric, the whole supply chain issues, the whole labor cost issues. All of these things are all part of the complete package that you've got to deal with. There is no one magic cure-all just because you have a new technology. It's how we use that technology in the context of the whole environment that makes, if we do it right, will improve everything.
Our thanks to Michael Dowling, the president and CEO at Northwell Health. His organization is the largest healthcare provider in New York. We spoke with him ahead of Northwell's annual Constellation Forum, which took place on Thursday.
You're listening to Bloomberg Businessweek. Up next, we'll dig into the Bloomberg Businessweek equality issue, which lays out a corporate promise made and kept.
The important thing is that it does appear that when pushed, companies can make change.
This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
So remember amid the pandemic, and more importantly, following the murder of George Floyd, how we heard from corporate America big time, making big statements and promises when it comes to diversity. Well, it turns out, Tim, it wasn't just talk.
This data-driven feature was a recent Bloomberg Big Take and can also be found in the equality issue of Bloomberg Businessweek magazine. We encourage you to view it online and on the terminal to get a better sense of these important numbers, and it's got a really cool graphical interface. Bloomberg News managing diversity reporter Jeff Green is here to help us break the whole thing down.
We took a look at the S&P 100, well, at least 88 of the S&P 100, where we had data from 2020 to 2021, so the year after George Floyd, to see what actually happened with their workforce after what they promised. So when we looked at the net added workers, that means everything subtracted, everything added, the 300,000+ workers that were in the S&P 100 companies that weren't there in 2020, 94% of them were people of color. And the first time we saw it, we figured we must have done something wrong. So we kept digging. And it's just, that's the number.
You know, it's interesting, John, because I feel like coming out of the pandemic, you're seeing, it feels like some of the conversations, some of the conversations and, narrative roll back a little bit. But what you're saying is companies actually went out and did it.
Yeah, well, the narrative that's being rolled back now was not the narrative they were acting on in 2020 into 2021. So that is a big question that is going to be, we're going to be watching is as 2022 data becomes available, which won't be till sometime next year. They don't have to turn this in till December. So sometime next year, we'll get a sense of what happened next. And, more importantly, I guess, is whenever we see 2023 data, what did that really mean? But I mean, the important thing is that it does appear that when pushed, the companies can make change. There's a lot of other factors that went into this, obviously, because there are demographic changes going on. The pandemic was very disruptive. We had people of color being brought back in quickly to a workforce after people over-adjusted and got rid of frontline workers, not understanding how things are going to work. There's many factors at play here. But when we dig into it, we still think some of it had to be on purpose.
Jeff, having said that, in most cases, right, diversity or people of color are still way underrepresented when it comes to what you find at companies.
Well, in this sample, because these are the biggest companies, it's about 50-50 overall, white and people versus people of color, which is higher than the workforce in the country, which is more like 70% white. However, when you look at that, when you look at the workforces even here, the higher paying, more power jobs are still underrepresented. There are still a smaller proportion of people of color in those jobs, but it did get better at every level in the data that we looked at.
So, Jeff, talk to us, though, about the types of jobs that these folks were hired for, because it's not just that they were hired. We know what types of jobs these people were hired for.
Well, to some degree, there was a predominant of entry-level jobs, those that maybe don't require a degree. But even at the level where a degree would probably be required or there would be a promotion required, we did see movement. I mean, we focused on Amazon, which net didn't change the overall racial breakdown of their company after hiring thousands of people. But they did push people of color up in the power structure. I mean, it was a very interesting move which looked to be purposeful once again in the way that they approached their hiring and promotions.
That's Bloomberg News managing diversity reporter Jeff Green. His story is in the current issue of Businessweek. It's the equality issue, and it's available now on newsstands online and on the Bloomberg terminal.
And that wraps up the first hour of the weekend edition of Bloomberg Businessweek from Bloomberg Radio. Ahead in our next hour, more from our magazine team, including the domestic cover story, which profiles the entertainment mogul that Hollywood ignored for a long time until now. We're talking about Tyler Perry.
Plus, with much of America keeping an eye on court cases involving former President Donald Trump, and fallen crypto mogul Sam Bankman-Fried, we look at the critical issues facing the nation's highest court as it enters a new term with guns, abortion, the limits of federal power, and much more on the docket.
This is Bloomberg Businessweek. I'm Carol Massar.
And I'm Tim Stenovec. Stay with us. Today's top stories and global business headlines are coming up right now.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Plenty ahead in our second hour of the weekend edition of Bloomberg Businessweek, including our domestic cover story on Tyler Perry's self-made media empire, which he built without much help from Hollywood.
Plus, the CEO of the regenerative agricultural company Regrow on using data to drive sustainability, and some key legislation that's set to help the cause.
That legislation coming from your home state. All right, first up this hour, the Bloomberg Businessweek equality issue covering a lot this week, including the U.S. Supreme Court opening up a new term. The remarks in the latest edition of the magazine ponder where its conservative revolution might go next. One federal appeals court already has lots of ideas.
In the next 9 months, an outsized share of the High Court's biggest cases will come from the ultra-conservative Fifth U.S. Circuit Court of Appeals. Those far-reaching rulings are proving impossible for the Supreme Court to ignore. Cases involving federal regulatory power, guns, and probably abortion and social media regulation are going to test, Carol, just how far the Supreme Court's conservative majority wants to go in remaking the nation's legal landscape.
We're all watching closely. Greg Storrs, Bloomberg News Supreme Court reporter, writes for Bloomberg Businessweek about the conservative Fifth Circuit and the key decisions that could come in the justices' next terms. He joins us from Washington, D.C. Also here, the editor of Bloomberg Businessweek, Joel Weber, with us at Bloomberg headquarters. I feel like the fourth quarter is a big one on so many different levels, Joel, but definitely for the nation's highest court.
So this is the beginning of a new term for the Supreme Court, and Greg has become indispensable in writing sort of these walk-ups and helping us make sense of these moments. Obviously, the Supreme Court has made a number of interesting and controversial and headline-making decisions within the last couple years. What he flagged heading into this one is that the Fifth Circuit is area of the country that is basically an appellate court that has a lot of very conservative judges, and this term in particular has a number of cases that originate with that appellate court. So, Greg, what does it all mean, and help us make sense of it all?
Well, it means a number of things. It starts off with some big cases involving the power of federal regulatory agencies. There's a case that the court's going to be hearing tomorrow involving the Consumer Financial Protection Bureau. That's the entity that regulates things like mortgages and auto loans set up after the 2008 financial collapse. And then it's got cases involving guns and almost certainly abortion coming up later on in the term, and they're really going to shape how far the Supreme Court's going to go this term.
Okay, so the Fifth Circuit, talk to us about what they oversee and their jurisdiction, and also what makes this time so different.
Yeah, so this is a court that has 12 Republican-appointed judges and just 4 Democratic-appointed judges, and 6 of the Republican-appointed judges are Trump appointees. And the individual personalities on the court are also very distinctive and very outspoken. So just to name one, there's a judge named James Ho who, even while on the bench, has written that abortion is a moral tragedy and said that if there's too much money in politics, it's because there's too much government. And these conservative litigants, in many cases like the state of Texas, which is part of the Fifth Circuit, like to get their cases before this court because very, very often they get good results. And with a number of these cases this term, what has happened is that this circuit has struck down an administration policy or said that an administrative agency has to change the way it's doing something. And the Biden administration has gone to the Supreme Court saying, hey, the Fifth Circuit's gone too far. So it's kind of testing just how conservative the U.S. Supreme Court is.
Well, it sounds like it's a list that they will be dealing with some very, very important issues. It's hard to pick out like what's the most significant, but where shall we begin in terms of cases that you, as someone who's followed the U.S. Supreme Court, like really is kind of front and center, and you're thinking about this one in a big way?
Well, certainly the gun case that they're going to hear arguments on November 7th is one that's going to get a lot of attention. This is a case involving whether somebody who is subject to a domestic violence restraining order still has his or her full Second Amendment rights. The Supreme Court back a year and a half ago in a case called Bruin said the way we test whether a gun restriction is constitutional is to look back into history and see if we can find a historic analog to the current restriction. And in this case, the Fifth Circuit said, we looked back at 1789 and we didn't see any laws that restricted gun possession by somebody who has a domestic violence restraining order, and therefore the Second Amendment doesn't allow this sort of restriction. So this is going to be a real test of whether the Supreme Court's history test that it set up a couple of years ago means what it seems like it means. And if it does, then that means it's going to be really hard to argue in favor of all these other gun restrictions around the country.
So what does that mean for the federal ban on bump stocks? If we're continuing with the firearms theme, what would this court potentially do in that context? And explain what bump stocks are, actually. I think a lot of people might remember them, I think, in the wake of the Las Vegas shooting years ago.
Mm-hmm. Right. It's a Las Vegas shooting. Basically, it's a device that turns a semi-automatic weapon, which is legal, into a machine gun, which is illegal. And the question, this is actually a very different legal question than the case involving the domestic violence restraining orders. This is actually a question of administrative law, not a question of the Second Amendment. The question is whether the Bureau of Alcohol and Tobacco and Firearms, when it banned those, and this actually was under the Trump administration, whether it had authority to do that. Essentially what ATF did was to say that a bump stock is akin to a machine gun, which is illegal, and therefore we're going to say that bump stocks are illegal too. So this one actually goes to one of those questions of how much power do federal regulatory agencies do. It just happens to be one that also coincides with this big fight over gun rights.
Greg, let's bring it back to core Bloomberg competencies. Two other areas that will be of great interest: the Consumer Financial Protection Bureau, as well as the Securities Exchange Commission. What might be in the balance here?
Yeah, it's like barely a decade old, I think, the CFPB.
Yeah, just slightly more than that. You're right. And this is actually the second time we've had a CFPB case at the Supreme Court. This is a Fifth Circuit ruling that in some ways came out of nowhere. This was not like an argument people have been raising for years, but the Fifth Circuit said there's a constitutional provision that says you can't spend money without a congressional appropriation. And the way CFPB is set up, it gets its money from the Federal Reserve. It's not subject to the year-to-year congressional appropriation process. And the Fifth Circuit said, that's unconstitutional, the way it's set up. And it struck down as payday lending rule that never actually took effect, but it cast a cloud over basically everything the CFPB had done, because if everything it's been doing all this time has been using money that it wasn't supposed to have, maybe there are questions about whether those past actions can stand. So there's a lot of concern, and there's a brief by the mortgage industry saying, hey, we're really concerned that this might unsettle the mortgage industry if the Supreme Court adopts in a full-throated way what the Fifth Circuit did. So big stakes for this agency. This is an agency that has been very active in a lot of fronts, both the banking world and the non-banking world. So the business community is going to be watching this one very closely.
I do wonder too, Greg, I think about our audience, right? And obviously Supreme Court justices decisions, will impact different parts of the U.S. population. But I think about the investment world and the business world, and I think about certainly the CFPB, they're going to be following that. But what do you think is top of mind for the Bloomberg audience?
Certainly, all these cases about regulatory agencies are really, really important. And the business community kind of has an ambivalent relationship with them. So they don't like a lot of the regulation, but they do like stability. And the CFPB case sort of threatens some of that stability. There's another big case involving it's a little technical, but really, really important, but about how much authority agencies have to interpret ambiguous federal statutes. And that's another case where if you give the agency more power, which is traditionally what they've had, that at least ensures some stability in terms of the regulations. So that is a big thing. So far this term, we don't have any of the major business fights, nothing over like punitive damages or class action, none of the kind of traditional fights that the Chamber of Commerce has been pushing. The biggest action is probably going to be in these administrative law questions.
Our thanks to Bloomberg News Supreme Court reporter Greg Storr and Bloomberg Businessweek editor Joel Weber for that report.
You're listening to Bloomberg Businessweek. Coming up, the Equality Issue profiles writer, director, producer, and actor Tyler Perry. He truly does it all. And we get into how he built his own media empire.
He did what has been key to his financial success. He insisted on owning 100% after Lionsgate was finished with those distribution rights.
This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
What is wrong with you? Why do you feel the need that you got to get somebody all the time?
Well, when you get and got, and somebody done got you, and you go get them, when you get them, everybody's going to get got.
Yeah, but you're getting the gotters when they didn't do anything to you to get you.
Yeah, but if the gotters get me, I'm going to get my Glock.
That's the voice of Medea Simmons. She's the famed movie, TV, and theater character created and portrayed by writer, director, producer, and actor Tyler Perry. Medea is considered the leading lady of Perry's sprawling entertainment empire. We know that, Tim.
Yeah,
She's
we sure
everywhere.
do. The latest issue of Bloomberg Businessweek magazine is the Equality Issue. It's out now on newsstands, online, and on the Bloomberg terminal. And one feature is this week's domestic cover story on how the Hollywood establishment largely ignored Perry on his way to achieving incredible commercial success, while also helping to turn Atlanta into a film and television hotbed.
There's a lot of amazing nuggets in that story. Hey, Bloomberg's Molly Smith and I actually caught up with Bloomberg News Atlanta Bureau Chief Brett Pulley to find out more.
I first met and spoke with Tyler Perry and did a story about 18, 19 years ago, his first film with Lionsgate, his very first film had just come out, Diary of a Mad Black Woman. And, it's really interesting to revisit someone from the time they're in sort of this new evolving stage that he was in, and then to visit him years later and he's a billionaire and, hosts Meghan Markle and Prince Harry at his house. That's like their hideaway when they left the UK, and his best friends with Oprah and all these things, and owns a really formidable motion picture studio here in Atlanta.
So, Brett, you get at this a little bit in the story here, how Tyler Perry grew up in New Orleans and then came to Atlanta and realized that this is where he wanted to set up shop, and gets a little bit starstruck almost every time he goes down I-75 and, sees his name on billboards directing them to Tyler Perry Studios. Just want to get a sense from you, this isn't the Hollywood Hills here, but, you've been in Atlanta for quite some time now. You're our Atlanta Bureau Chief. What is it, how much of it do you see driving through the city there?
Well, you see both things. You see Tyler Perry's presence, as you mentioned. You can't, go to and from the world's busiest airport, which is in Atlanta, without seeing those signs off the highway, because it's so relatively close to the airport. And so his presence, is significant in so many ways. And as is the presence of the entertainment and the motion picture business here. Just over the last 10 years or so, since very aggressive tax benefits have been put in place by the state, a lot of film and television is produced here. Practically all of the Marvel stuff from Disney is done here. And a host of programs, television programs and films, and it's interesting because it has prompted a lot of people who would otherwise be in Hollywood to be here in Atlanta, and that's talent. But also, I've been having conversations with people who are in film finance, and some of the big agencies have put offices here. And so it's really becoming a Hollywood West, and Tyler Perry is a large part of that, and certainly the largest personification of that.
Tell us about Tyler Perry, though. And, it's interesting as we teased into it. I mean, this is, Hollywood sometimes misses trends and waves, no doubt about it. And they definitely, the Hollywood establishment, as you point out, ignored this individual who wrote, who directed, who produced, who acted, truly the one-man show. What is it that Hollywood missed, and why did they miss it? And tell us how Tyler Perry is just turning how we make content upside down.
Yeah, well, I think what they missed is that, there are a lot of places to look for business and to look for an audience, right? And I think the prism may have been a little too narrow in Hollywood. Tyler recounts some great examples of that. He went to see an executive after he had built an audience with his stage plays around the country, right? At all these theaters in cities around the country, people would, church groups and stuff loaded up on buses, and people went to see these plays. And then he created a great ancillary revenue along, with merchandise and other sales. And so he had made a fair amount of money before Hollywood had discovered him.
$100 million in annual ticket sales, and you say $50 million in ancillary revenue. Go ahead.
So when he finally got a deal in Hollywood with Lionsgate, right? He put up half, they put up half, and he did what has been key to his financial success. He insisted on owning 100% after Lionsgate was finished with those distribution rights. So after however many years, 100% ownership of all of these films goes to Tyler Perry. So, as a result, Tyler owns all 28 of the films he's made. He owns over 1,800 episodes of television. I mean, you talk about a long tail. As distribution platforms change, and we know they keep evolving and changing, who knows what in the world that'll be worth one day.
Right. Hey, listen, I want to, though, go to what you started to say, that when he went to visit a Paramount Pictures executive looking for a film deal, and they said, well, black people don't go to the movies. Well, he has shown them that they certainly do, right?
That's for sure. I mean, all of the films, every film that he made for Lionsgate, I'm not sure about the subsequent ones, but, the lion's share, no pun intended, of his work has been distributed by Lionsgate in terms of motion pictures. They all made money, and they're reliable sources of revenue, and he delivers them on time, and he delivers them under budget. And of course, these are things in a very unpredictable business, I should say, such as motion pictures, that Hollywood likes. And so he has been a reliable sort of production machine for the motion picture and television business.
So, Brett, you mentioned that Tyler Perry's been trying to extend his commercial reach. He's openly said that he wants to buy BET from Paramount. You also mentioned in the story that Tyler Perry's trying to get into streaming. So what's the next big move for him?
He's certainly interested in BET and has been interested in I guess it's a matter of if Paramount puts the property back on the market. And he has deals with Netflix and with Amazon, and is in the streaming world and has some projects coming up in that world with some formidable stars such as Kerry Washington and Oprah Winfrey and Susan Sarandon. So he's still on the hunt for the elusive critical success, but certainly sticking very close to what has made him a tremendously successful guy.
So many great nuggets in this story about how he came to be and just kind of where he's going. Brett, thank you so much. Of course, our Bloomberg News Atlanta bureau chief, Brett Pulley. His book, by the way, on BET is called The $1 Billion Bet, so check that out as well.
Molly Smith with Carol and Brett right there. Tyler Perry, such a big voice today when it comes to content, when it comes to media, when it comes to culture.
Totally.
On that, a reminder that we will be on the road in Los Angeles this coming Thursday for the first ever installment of Bloomberg Screen Time. We'll be speaking with the moguls, celebrities, and entrepreneurs defining the next phase of pop culture. Find out more at BloombergLive.com.
An amazing lineup, and we're going to be featuring some of those folks on air. Well, speaking of the West Coast, up next on Bloomberg Businessweek, how the Golden State is taking the lead in data-driven sustainability guidelines within the all-important agricultural sector.
That's straight ahead. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130. This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
And our next guest is a Bloomberg New Economy Catalyst class of 2022. Now, just a reminder, catalysts are people whose innovations, efforts, and objectives have a genuine shot at changing the world for the better. And we are so delighted to have back with us Anastasia Volkova. She's the co-founder and CEO of the regenerative ag company Regrow. We got to talk about some of the accolades, Tam.
Yeah, well, let's just start with just a couple of them, okay? But we can't say them all, or else we're not going to get any time for an interview. Let's just go with this one. Time has named Regrow as one of the 100 most influential companies in 2023. Fast Company has named it one of the most innovative companies of the year, and Anastasia was named to the Time 100 list of the next 100 most influential people in the world.
Can I also say,
aren't you happy you called it First Wave Catalyst?
Yes. You also have a PhD in visual drone navigation, which I always think is so cool, and I think we talked about it last time. Good to have you back with us.
Yeah, fabulous to be back. Thank you so much for having me.
Absolutely.
It's wonderful to also see all the momentum in food and agriculture space. I and the industry leaders generally, we believe that it's an industry that can decarbonize the soonest.
Are things really changing, and
things are moving
What does
forward.
momentum mean?
What does it look like? Okay, let's look at the most recent pieces. So 2 California bills passed in legislature, and they are going to mandate climate disclosures for companies over $1 billion in revenue trading in California. There's also a segment for $500 million revenue companies.
What does that
as
mean?
well.
What do they have to show?
It literally means that they need to go and calculate how they are impacting climate in their own emissions as well as their purchased goods and services. So if you are, for example, a food company making food that ends up on the shelf or on the plate, you literally need to be thinking about what are the emissions on farm, because this is where the largest portion of those emissions sits. And by 2027, you will have to declare it, which effectively means that if you start measuring it, you'll start managing it.
When you say that this is one of the industries that can decarbonize the quickest, are you including animals in this as well? Like, are you including cattle farming?
That's
cattle
right.
ranching?
That's right.
How?
All of agriculture.
How? I mean, this is like one of the worst things for the environment.
It's very subjective, right? So when you start thinking about what are the animals supposed to do versus what we got them to do, how we disaggregated agriculture, whilst in an integrated system, they're actually all very helpful. It's a more circular system. You can feed them better crops. So a lot of emissions in the animal system are still in the crops. We produce most of the crops to feed animals, not to feed ourselves. So that's where the majority of the impact will come first.
Are you
in the
saying it's
cropping
okay to
side.
eat a burger?
I am saying that we need to decarbonize all parts of the burger
Okay.
and starting to list what are the parts that we should decarbonize.
Okay.
But the
I
thing
am
is-
definitely saying the alternative burger is better for the environment, yes, but there's things about the burger that are also not terrible for the environment.
Anastasia, when you work with a company, what exactly do you do for them?
We help them first uncover their scope 3 emissions, i.e. those that are on farm. So if they come and pick their supply sheds, they say, I source this over there. Can you tell me how is that impacting the environment? And we actually ladder up the data from the field level. So we have dynamically generated data on a near real-time basis that can say, here's what's happening in the landscape. This is what's impacting the environment right now. Once they have that snapshot, they can also model with the platform that we provide them, the Ag Resilience platform, the abatement potential. That is to say, what can I change for better? What can I reduce? How can I get to my emission reduction goals?
So it's not about carbon offsetting. It's actually so you don't create carbon in the first place.
Yes,
right?
It's value chain investments. It's almost, we call it insetting. It's the opposite. So you take action within your value chain. You are not, you're reducing your own emissions. You're not looking to offset them somewhere else.
I hate offsets, sorry.
No, and European Commission is with you.
Because you shouldn't be making, you've got to reduce the carbon footprint. It's not a case of...
Because it's not taking it out.
Exactly. I'm not going to, all right, so I'm creating a lot of carbon, but I'm going to go plant some trees. You're still putting the carbon in there. Like, we've got to reduce it overall. That's just Okay,
Absolutely.
I'm off my soapbox.
No, absolutely. We have to find ways of producing food in a way that doesn't harm the environment so much. It actually renews it and regenerates it.
Is vertical farming one of those answers?
Ooh, Tim, good question.
It's very controversial.
It's very controversial because you have to consider everything from the system perspective, right? So on one hand, you have the transportation of, say, salad from Salinas, California to New York City, and that's absurd. So you probably should consider growing it here. If you recycle some of the resources, if you're able to provide it with the water it needs without drawing more water into that farm over time, okay, great. But you're still looking at a system that largely requires artificial synthetic inputs, fertilizers, and they sustain the system, as opposed to, say, soil out there that, when healthy, sequesters carbon and provides water cleaning, clean air, all of those ecosystem services to us living all around those environments.
You know, it's interesting. We had Johannes Zuting of Paris 21 on, and they basically are making sure that, or helping the developing world, create data sets. They don't actually have the data, but they're pulling from different sources and making sure it's pure. But the whole idea is you need to collect and track transformative data to help bring about transformative policies and change. Talk to us about the importance of that, having that data that you guys are providing, right, the information, but also go hand in hand with governments, states, countries saying we've got to do better. And so you need the data to kind of meet those requirements.
Absolutely, it has to. And we have plenty to update the listeners on. With the IRA money, with the Inflation Reduction Act and the embedded Climate Smart Commodities program, the administration is looking to effectively accelerate the investment into low carbon commodities in agricultural sector. But also they have released recently an initiative specifically focused on the data and the MRV, the monitoring, reporting, and verification of emissions and practices. And they completely go hand in hand. So if we ever want this to be a truly bipartisan issue that is internationally accepted, we need to start looking at the data and not wondering where the money is going on. Because once you are seeing that the money is getting to where it needs to be, why wouldn't you invest more in it? Because you are getting that return you're looking for, but it's the data that needs to tell that story.
Talk to us more about this, because I always wonder about incentives here. It's one thing for the state to actually require disclosures like California is doing. And it's a side point, but my concern is that, okay, all these companies are going to move to Texas, which is a state that will not require these types of disclosures. Maybe that's a conversation for a different day.
Can you really grow almonds, though, in Texas?
I mean, you could base your company in Texas instead of basing it.
Anyone who trades in Texas, not anyone who's headquartered, like in California, for the California bill. You just have to be trading in California. You are not headquartered in California.
So people won't get around it.
I don't think you can move something to Texas and stop trading in one of the largest economies in the world, that is California.
Yeah, that's very true. Okay. Maybe the lawyers will be busy trying to figure out a way. Maybe.
See, hopefully not.
So what's going on?
But my question is really about is really about data and where that data comes from and how you measure that data in this day and age.
That's right. When you're looking at this type of bill, people are getting concerned that this will actually put more burden on the suppliers, of which farmers is one of the categories in this industry, of course, the primary category. So this data, you don't need to invent more ways to get this data. We already, as Greta Thunberg always says, we already have all the solutions. We just need to actually implement them. So Regrow gets data from farm management systems, statistical surveys, but importantly, satellite imagery. So remote sensing of practices tells us a lot about what's happening in the land in a non-invasive way, in a very scalable and cost-effective way. Then we pass it through climate models, soil carbon, crop models, to understand what is the impact on the environment. So we see the practices from space, from local systems. Tractor tells us what's going on. We don't have to ask the farmer for absolutely everything. We have to accept that agriculture has been running on data. It's a big business. It's a big industry. It has the data. If you provide the incentives and you assure the privacy, you will be able to get the system to a level of transparency where it can all actually flow in a direction of Paris 1.5 degree trajectory.
What companies are you working with?
We're working with General Mills, Kellogg, Cargill, folks across the supply chain, from those that provide input to the farmers, trade and aggregate and process the commodities, all the way to those that you pick up their boxes off of supermarket shelves and plates.
Our thanks to Anastasia Volkova. She's co-founder and CEO of the regenerative agricultural company Regrow. She joined us in studio during UN Climate Week. And one update. The 2 California bills she discussed are scheduled to be signed into law this month.
You're listening to Bloomberg Businessweek. Coming up next, from farming to fine wine and dining, thanks to the upcoming return of the annual New York City Wine and Food Festival.
The creator of it all, founder and executive director Lee Schrager, on the other side. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
Bloomberg News Economics editor Molly Smith back with us for our final segment. As you all know, we love talking food and wine here at Bloomberg Businessweek. It's always highlighted in the Bloomberg Pursuit section of the magazine. With that in mind, the Food Network New York City Wine and Food Festival about to get underway. Have you ever gone?
I'm going to ask our next guest about it because I have not, shamefully.
You're missing.
I am.
It's October 12th through the 15th. Brings together a who's who in the food and wine space. Chefs Daniel Boulou, we have had him on our air. Many more from the industries. To tell us about it is Lee Schrager, founder and executive director of the New York City Wine and Food Festival, joining us on Zoom in New York City. Lee, how are you?
Good to see you, ladies. How's everything?
Doing well. I feel like on a daily basis, I could use a good meal and a great glass of wine. Having said that, you guys are in your 16th year. Tell us about it. Remind us about how it all came to be and how it's evolved and your relationship with the Food Network and bringing this all to life.
Well, 16 years and you have not been once. That is horrible.
I've been
to me. Don't look at me.
I've been to South Beach for that version.
Okay. Well, that's how it all started. It started actually in South Beach about 24 years ago. We're going to our 23rd year in February in South Beach.
I'm curious though why South Beach first, and then why you kind of waited a little bit before coming into New York.
Well, two good answers for that. A, I live in South Florida.
All right.
So I started there. B, because nothing is easy in New York, and I really wanted
Say that
to make
again.
sure I really wanted to make sure we kind of worked everything out before we went into a city that really was not forgiving in the sense, they expect the best, and I wanted to deliver the best. So when I felt comfortable that we were as good as we were going to get, or as good as we could get to start moving forward, and I felt comfortable, that's how it happened.
So Lee, asking for a friend here, obviously, but if you've never been to the food and wine festival, what would you tell somebody, a newcomer, what to expect, how to prepare, how much to budget for something like this, and what kind of events should you really be zooming in on? It seems like there's just so much to choose from in so little time.
I would really, if you're a first timer, a lot of people who come for the first time want to try so many things. And although we would like to sell a lot of tickets to you, I'd rather you do less and appreciate it, because it gets exhausting. If you're doing a brunch next Friday with Martha Stewart and Daniel Boulou at Tiffany, and then you're going to go to the grand tasting in the daytime, then you're going to go to the Burger Bash at nighttime, that's a lot. And I think it's too much. So I always say to somebody, pick a daytime event, one nighttime event, or a daytime event and one late night event, or a dinner event and a late night event, and really enjoy it. Wear comfortable shoes, drink responsibly, and don't overdo it. And there's a lot of food, there's a lot of drink. New York City is not easy to get around with traffic, so I kind of pick where, even myself, I pick where I'm going and keep to an area every night. So I try to maximize the events I can go to.
That was Lee Schrager, founder and executive director of the New York City Wine and Food Festival. All net proceeds benefiting the nonprofit God's Love We Deliver, and it all kicks off on Thursday. And for more details about the menus and the celebs that will be part of this iconic event, just head on over to our podcast feed.
And that wraps up the weekend edition of Bloomberg Businessweek from Bloomberg Radio. Thank you so much for joining us. And a big thanks to Simone Foxman and Molly Smith of Bloomberg for their help over this past week.
Yeah, really grateful to everyone on the team for jumping in when I'm certainly not available. Be sure to tune in to Bloomberg Businessweek Monday through Friday starting at 3 p.m. Wall Street time on Bloomberg Radio and on Sirius XM channel 119.
You can also watch our daily broadcast on YouTube. Just search Bloomberg Global News. We're simulcast on Bloomberg Originals, available at Bloomberg.com/originals and streaming platforms including Roku, Amazon Fire TV, Samsung TV Plus, and more.
Find our Bloomberg Businessweek podcast at Bloomberg.com, Apple, or wherever you get your podcasts. The latest edition of the magazine is available on newsstands now, at Bloomberg.com, and always on the Bloomberg Terminal. I'm Tim Stenovec.
And I'm Carol Massar. Have a good and safe weekend. Stay with us. Today's top stories and global business headlines are coming up right now.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.